Hi there. I've got a really good update for you all on the latest bank funding and the bank guarantee scheme. I spent a lot of today on the phone and on Zoom calls with the various experts we've got on our network. Just going to timestamp this because things are moving quite quickly. This is Wednesday, the 1st of April in the afternoon. So the calls I've had, I have to say, we had an amazing Zoom call with Nick Rotten and David Marshall this afternoon. And when you realise halfway through it would have been awesome to have recorded it, but we forgot. So you've got me instead, unfortunately. So the first thing to say is the banks are genuinely completely inundated. If you can imagine an entire year's worth of business coming in a week, that's what they're dealing with, coupled with staff shortages through sickness, and clearly they're under-resourced from what happened through the recession and all the scaling back the banks have done. So it's just important to bear with them on that side of things. Now, before I go through the detail on what the scheme is and what the latest information is, I'm going to give you some real clarity on what this scheme is not for, to stop you wasting your time and wasting the bank's time, because a lot of the problems we've got now is people applying for the money who don't qualify, who aren't eligible and who don't need it. So this is what you shouldn't use it for and should not apply for. You have got to have a viable business based on your 2019 accounts. If you were not pre-corona not a viable business that could have secured bank funding, you're not going to secure it now. The bank guarantee scheme doesn't change that at all. So if you are not viable, if you're a loss-making business, if you could not pay back debt, you are not going to get a loan under this scheme. So don't try. You cannot use this to put a cash buffer into your business. You cannot use this to go and buy premium bonds. It is not designed for that. So please don't try to use it for it. You've got to have a genuine cash need that you can demonstrate on a cash flow forecast that shows exactly how much you need and when you need it. If you can't show that, there is no point asking for a lump sum just in case. May as well give it a try. You are just clogging up the system and stopping people who really need the money from accessing it and creating this huge backlog because they've got to go through and process every application. So please, please, please don't waste their time unless you're pretty confident that you qualify for the money. And you've got to show you can pay it back over 5 to 6 years. Now, year 1 is interest free. Debt repayments won't start till year 2. And you can, of course, repay back anytime without penalty, but you've got to know you can pay it back, otherwise they are not going to lend you the money. So yeah, please, if you're applying for any of those reasons, just don't, because you're not going to get it. You're wasting everyone's time and you're stopping people who really need that money from it getting to them. So a word on interest rates. There's a lot of hysteria around about interest rates at the moment. Everyone I've spoken to has said they are not seeing excessive rates on the high street. Obviously, Facebook and the Daily Mail and such like are going to like to bandy around the scare stories, but they are just not what any of my contacts are seeing at all. So we just like to kind of put that hysteria to bed. You know, banks are applying sensible lending rates to sensible business propositions. As a guide, if you were the best possible business, you would get around 3% over base, rising to the 5 to 7% mark for a high risk business, and that is for high street banks. If you're going to second tier funding, you're going to be looking at 12% as a starting point through to around the 16% mark. Obviously, if you have to go to a high risk lender, they are going to charge you a lot of money for it. And the advice is don't go into loans with very high interest rates, because we've got to pay this money back at some point. So just take a reality check on this. If you can't get the money lent at a sensible rate, there is a really good reason for that. You know, banks don't lend you money unless they're sure you can pay it back, and no one wants to be taking people's houses from them or exercising personal guarantees. Now, on the security front, the high street have now said, I know there's a lot of scare around last week and a lot of them backed down on that, no personal guarantees for less than £250,000, but they will want whatever other security they can find in your business, be it that a floating debenture on your assets and your stock, be it on certain machinery, on a building if you've got equity in there. If this is normal business practice, banking practice, they will want security if it's available, and they have to exercise that before the government are going to cough up if you can't pay. So please, you know, be reasonable about that. In any of this is not a business as usual banking situation. Normal rules apply. You've got to be able to prove you can pay the money back and that you're willing to offer security. The scheme itself, this is if you're able to access normal bank funding, you are not going to be put into the CBILS scheme. You're not going to have access to the guarantee scheme. This replaces the EFG, the Enterprise Finance Guarantee Scheme, where the funding was only for businesses who would otherwise access debt but lack the security to do so. This is replacing that scheme. This is not a catch-all. This is not an entitlement for anybody. This is not a blanket catch-all. So you've got to be capable of securing funding in the first place, which means viability, ability to pay back, fundamentally a good business. And it's really harsh to say this, but there's no point dancing around it. If you are not a business who is capable of borrowing money and repaying it, you shouldn't be borrowing it, and you're not going to get it lent to you and under anyone other than a very, very high risk lender. I'm sorry if that's harsh, but we've got to be realistic about this. The banks aren't there just to bail us all out. It's there for businesses who are viable, who have a chance of carrying on and who need those funds, and they can pay them back again. Now, information requirements. Everyone I spoke to has said the same thing on this measure. You're going to need your 2019 accounts, because that is what is going to prove that you are a steady business and that you are viable before this all happened. So you've got to have those accounts prepared, and you're going to have a full cash flow forecast that clearly shows what you need. Just checking I'm recording this. I am, thank goodness. You've got to show the assumptions that you've used to come up with your cash flow requirements. You've got to make an assumption of how long your income is going to be reduced, affected, or missing. And you've got to justify what the bottom of this cash flow pit looks like for you. You can't come in with a blanket figure of like, oh, give me 100 grand. You've got to say what you need, what you want, and literally how's it made up. The bank will want to know that you've gone down all of the other routes first. So you've got the job protection scheme in hand, you've furloughed staff if that's possible, you've applied for all the available grants that you can, you've stopped as many payments as you possibly can, you've frozen your payments, you've put your finance payments on hold, you're negotiating with creditors, and that you've reduced directors' pay. Banks don't like providing funders to top up directors' salary. You've got to show you've got some skin in the game, as they would say. And you need to show in that plan as well what the risks and challenges are going to be later on for you. They need to know what you're going to face when you come out of this so that they can assess the risk of your business. And you've got to prove you can service the loan in 12 months' time based on your 2019 performance. Overdrafts, been a lot of talk around this. We were kind of told a few days ago that overdraft was the way to go to meet very short-term requirements if you're worried about meeting payroll. Now that is still the case. Small extensions will be approved quickly, again, if you're viable and the bank know you and trust you. If it's a bigger overdraft or a brand new overdraft, or say going from, I don't know, 25k to 50k or 50 to 100, it's going to have to go through underwriting. They're lending you more money, they have to go through usual robust procedure. You're not going to get to shortcut this just because of what goes on, and that means going into that queue of applications. So just be aware of what you're asking for there. Right, timing. If you apply to the bank, even with the most well-packaged set of information, with no missing information, with no questions to be answered, it's going to take at least 4 to 6 weeks to get an answer and get the money. And you must not assume any less than that, otherwise you're going to run short of money. And as the backlog increases, that timeline is going to increase inevitably. We know that there's a shortage of bank underwriters at the moment, and they are working flat out with minimal resources. If they have to come back to you with questions, it's going to take longer, and you could go to the bottom of the pile to be processed again from scratch. So don't apply until you've got all the information. What I would say is consider using a broker who can check your eligibility, check your criteria, and package everything that they know the bank are going to need to the point where they are pretty confident you're going to get approved, because that means that's the quickest possible way to get the funding through. And because of how they work, they have different channels into the bank that are maybe quicker than you could achieve individually. And a well-prepared application is going to get priority over a scrappy application with no justification, missing cash flow, and lots of unanswered questions. Information on the loan size, which I actually didn't know until this afternoon. The maximum loan you can apply for is the higher of 25% of your 2019 revenue, or 2 times your annual payroll. So that's really useful to know as well. So I hope that's been useful. I will maybe today, hope definitely by tomorrow, I will type that up into an article, put it on the group. But I hope that's been useful. Please share that with anyone you know is concerned about bank funding. But for me, that's given me an absolute ton of clarity on just what's going on with the bank situation. So there you go. Talk to you all later. Bye.